Greetings, ladies and gentlemen, we are Team K and we are ready to present our Yandex share price research.
Our target price is 6,757 rubles per share by using our DCF model and enterprise value on EBITDA multiple based on peers. Our recommendation is based on, first of all, rapid development of industries such as mobility, food tech, e-commerce, and media. This important growth from 35% to 60%. Second part is over 250 billion rubles in a cash at a low company to improve their production in successfully dominate on Russian market. As a result, we implemented that buying Yandex shares are investment in the future. We expect that amount of Yandex shares used will increase in 2.5x from third quarter 2020 to first quarter 2024 year. Today, mobility and food tech is one of the main Yandex drivers. We are expecting that market of taxi will increase to 62% in Moscow and 32% in other cities. Also, we anticipate to fast grow in e-commerce segment with CAGR 34%, and which will become the main part of revenue. This has to do with the fact that COVID-19 pandemic accelerates online purchase. Of all competitors in a segment, only Yandex has the most significant financial opportunities among other players. As a result, we expect over 100 billion rubles as a revenue in a 2024 year. Due to the possibility of synergy with other business segments, a large volume of search query data allow analyzing better the market and user behavior patterns, which result in a better understanding of market demand. This factor makes a possibility to create a pricing system the best in the market.
Let's talk about industry overview. Search and portal is the largest part of a business, which was the first Yandex business. It generates more than 50% of the revenue and makes Yandex one of the leaders among all search engines in Russia, with a significant share of search queries. Like our internet services, Yandex search and portal segment will continue to be beneficiary of an increase in internet penetration and use of mobile devices. Yandex midterm strategy assumes expansion of revenue diversification. That can be achieved by expanding the market share in their business, such as the media services. Yandex Plus is a product that allows consumers to access Yandex Music and Kinopoisk HD in one subscription, receive special discounts and cashback points. Creating one subscription for several services is one of the trends in the consumption of media content. It is much more convenient for the consumer to have one subscription with all services that he uses than to have. The integration of such system also increases cross-selling and the penetration of other Yandex services into consumption of Yandex subscribers.
Now we will move to the valuation part of our analysis. According to our estimates, we set Yandex target price at 6,757 rubles per share. This valuation was carried out using the DCF and comparable companies analysis method. We used EV/EBITDA in 2021 year. Our discounted cash flow method forecast is 7,610 rubles. For our calculation, we used 11.7% discount rate. According to our forecast, the income structure of Yandex will change significantly. Strong shift in the revenue structure is due to the rapid growth of taxi and e-commerce segments and will lead to the fact that Yandex will have three independent, fast-growing businesses segments by 2025 year. Yandex recently announced that they plan to merge a fintech company or start from scratch a startup with a banking license within the next year. This means that the current forecast should be adjusted to reflect this strategy. Possible targets for acquisition include Alfa Bank, Home Credit, Russian Standard Bank, Kiwi, and Tochka. The analysis of comparable companies showed that the market values of Yandex rather low by EV/EBITDA in 2021 multiple. Our target price for this approach is 3,446 rubles. All large technology companies at this stage of development successfully optimize their costs. This allows companies to generate higher EBITDA levels. However, Yandex turned out to be underestimated because it is actively launching new projects. This lead to high costs and lower EBITDA.
And now we introduce our financial analysis of Yandex. This value decreases in the forecast period from 0.26 in last 1 month period to 0.15 in 2024, which can be explained by the fact that in the future we assume that the company will not take out new loans, and with constantly increasing capital, this ratio will decrease. Interest coverage shows the coverage of interest payments by operating profits. This ratio falls significantly at the end of 2020 due to a sharp increase in interest deductions. But further in the forecast period, since interest payments do not grow, this ratio will increase due to the growth of operating profit. As we know, Yandex doesn't pay dividends to its shareholders. Company tried to use all available funds to invest in and develop their new projects. Also, free cash was used for mergers and acquisitions. The company doesn't intend to create dividends for shareholders, since Yandex continues its active development and free money will be used to finance this development. However, during the development of the company, opportunities for investments and transactions can be exhausted and the company will be able to redistribute part of the free cash to its shareholders.
And the next one is investment risks. Yandex is facing increasing competition from such companies as Google, search competitor, Mail Group, internet services peer, and Sber ecosystem peer, which may have a negative effect on Yandex business, financial position, and activity indicators. Risk of technical interruptions. Yandex, like most IT companies, frequently face the risk of technical interruption to service, also thanks to mitigation strategies as developing business continuity plans and disaster recovery plans. We didn't see a meaningful effect the valuation. Risk of reputational losses. Yandex keeps and proceeds personal data, and therefore it's obliged to provide customer data when the government requests it. Nowadays, there are plenty of cases when sharing customer data leads to fall of trust and part of the public. Limits to foreign ownership. If the existing limits on foreign ownership will be broadened to include Yandex, tangible negative effect on company and cost of its shares may follow. And finally, let's talk about SSG, economic, social, and governance. Environmental side. Yandex constantly implements projects that aim to improve the environmental aspect and try to be a company with zero emissions, such as offering sustainable solution for packaging and delivery in Yandex Lavka, for the better waste management, highlighting eco-friendly purchases in Yandex Market, or eco-friendly ride, offering autogas options in Yandex Taxi to decrease carbon emissions. Social side. The company frequently initiates projects to improve social interaction, such as supporting people with disabilities through the Deaf and Hard of Hearing Drivers program, offering kit service in Yandex Taxi, ensuring the regular disinfection of its car-sharing vehicles for the safety of its clients in Yandex Drive. Yandex also plans to vaccinate its drivers against COVID-19. Social project helping hand to combat the COVID-19 pandemic further demonstrate social commitment to social responsibility. The company provides informational platforms as well as transportation for doctors, medicine, and other essential suppliers. Furthermore, the company cooperates with many universities on its Yandex Education branch and has established a professional training programs for students in data analysis for free. Governance side. Yandex Board of Directors consists of 2 executive directors, 8 independent non-executive directors, and 2 design directors appointed by Public Interest Committee. The Public Interest Committee has ability to act as a gatekeeper with the ability to control more than 50% of its votes and any meetings regarding emergency situations connected with corporate governance, IP rights, and personal data. Yandex has a priority share that Public Interest Foundation holds. The priority share grants no economic rights but provides a special voting rights.